You want to start analyzing your own stocks, but you don't know where to begin because of all the different fundamentals and metrics that go into fundamental analysis. The first thing that you want to look at when choosing a company to hold in your portfolio is the market cap or market capitalization. You should be looking at this before any other metric. Market capitalization refers to how much a company is worth as determined by the stock market. It is defined as the total market value of all outstanding shares of the company. It's not to be confused with intrinsic value or book value, which is the actual amount that the company is valued at depending on the numbers and is driven by earnings. Publicly traded companies are often split up into 3 or 4 different groups depending on the size of their market cap. Large cap companies have a market capitalization of $10 billion or more. Mid-cap companies have a market cap ranging from $2 billion to $10 billion. Small-cap companies have a market capitalization of $300 million to $2 billion, and any company with a market cap below $300 million is labeled a micro-cap company. Calculating a company's market cap is very simple. All you have to do is take the current share price and multiply it by the number of outstanding shares. I know you guys may be saying, well, where do I find the number of outstanding shares of a company? You can either just search it up in Google, or I will show you where you can go in Yahoo Finance to get this information. So you're going to go on Yahoo Finance, search up a company. We'll use Facebook, for example. They're a large cap company. You can see Yahoo Finance has already worked out the market cap. So you're going to look at the share price, $273, and then you're going to go over to the Statistics tab. Scroll down to Share Statistics, and there is a metric for shares outstanding. You can see it right there, 2.4 billion shares outstanding. The reason that you want to look at the market cap before any other metric is because you want to begin to gain an understanding of the company that you were looking at. Large cap companies with that $10 billion market cap or more have been around for a long time, and they are often very established in their industry. Investing in large cap companies may not necessarily bring back large returns, as they often lack huge amounts of growth potential. But over the long run, they generally tend to increase slowly, and oftentimes they pay dividends back to their shareholders. An example of a large cap company would be Facebook, stock ticker FB, and they have a market cap of $779 billion and a current share price of $273. Mid-cap companies with a market cap ranging from $2 billion to $10 billion are companies that operate in an industry expected to experience rapid growth in the future. They are often in the process of expanding their business alongside the rapid expansion of whichever sector they're in, and they are a little more risky than a more traditional established large cap company, but can offer slightly higher growth. Small cap companies with a market cap ranging from $300 million to $2 billion are often young in age, and they're still trying to figure out their business, or they often serve a smaller niche market. As a result of this, these companies are often considered much higher risk than large and mid-cap companies, and this is exemplified through the share price, which is often much more volatile. Additionally, because the share price is much more volatile, the stock is not as liquid as a large cap company, but it's important to note that these companies with smaller market caps have the highest growth potential in the future. The small cap company we're looking at today is AMC Entertainment Holdings, stock ticker AMC. They currently have a market cap of $1.882 billion. The last thing I wanted to talk about is just to show you an example of how you calculate the market cap. We talked about before, multiplying the shares outstanding times the total share price. I've gotten the shares outstanding for 3 different companies here: Facebook, Peloton Interactive, and AMC Holdings. And I have also gotten the shares outstanding from Yahoo Finance, as I showed you earlier. And you can see the shares outstanding column multiplied by the share price column gives you the market cap. If the market cap that you calculate is not exactly the same as that of Yahoo Finance, that's nothing to worry about, because as the stock is being traded throughout the day and the share price is changing, the market cap continuously changes, and depending on how many shares outstanding there are, it'll change at either a higher or lower rate. give or take a few doesn't really matter in this situation, as the market capitalization is more a metric to figure out some background information on the company that you're buying into. And the number of shares outstanding can also give you insight on how large the company is and how diluted their share price is. If you enjoyed the first segment of Fundamental Fridays, where we look at a separate metric each week, please subscribe to the channel, smash the like button, and make sure you check back in next week to further your fundamental analysis ability. As always, I'm Patrick Zimmerman. Thank you for your time, and have a nice day.